All right, check, radio check. We'll get started. It's 4:30 on Thursday, November 7th. I want to thank all of you for taking time out of your busy schedules and days to stop in and listen to what we have to share. For those of you that don't know, November is Long-Term Care Awareness Month, and observing this awareness month could save your retirement. If you've ever experienced a family member that's gone through and needed care, this has been really a focus of our practice for about the last 3 years. It's been something I've talked to clients about. I've been in financial advisor over 30 years now, and although it's been prevalent, as part of our conversation, it was almost sort of an afterthought after we started planning. But as I got my designation certifications and started to, discuss with people, hey, this is important. Some thoughts came back to me, and what happened in my family, and this is why I share this story. These are pictures of my grandfather on the left. Alan Strong was an Air Force, participant. He was in the military, and there's my grandmother to the right. And like many people back in America back then, he smoked. And years of smoking caused hardening of the arteries, and he ended up having to have both legs amputated, and he was bedridden. And my grandmother in Miami, Florida, had to take care of him. But that house you're looking at as a picture, they lived in. My mom grew up there, and I point out that what happened was she could not take care of him anymore. So she had to sign him over, or the house over, to a nursing home when she placed him in for care. And, they don't kick, your grandparents out, right? Um, but what they do is they hold a note, and basically it's you owe me, right? So fast forward, my grandfather eventually passed, and then my grandmother, she lived there for a little while, and then she got sick, and she went into the nursing home. And when she went into the nursing home, they took the house. And here's the really the just the insult to injury is they ended up, she got better, and she had no place to go to. And so we flew her up there. My mom brought her up to North Branch and lived in a cohabitated type environment. And it was a small house, but I share that because this was my family's asset. And now I just looked at it the other day. It's now worth $400,000 because I didn't know about it. I didn't understand about it. Long-term care really wasn't invented yet. But this is the confiscation of wealth to take care for an aging population. It happens every day to every single person on this call. It is coming. As we get older, we're living longer, and it brings to mind the three questions that I think each of us on this call should ask ourselves, right? If you got sick, you needed extended care, custodial care, long-term care, where would you want that care to be? Would you want it in the comfort of your own home, or do you want to go to a nursing home? Right? So once you answer that question, and there is no right or wrong answer here, and most people will, that I've talked to in my career would prefer to be taken care of at home. But then, once you decide, okay, I want to be taken care of in my home or a nursing home, the question you have to ask yourself, look at your financial picture. Which asset would you want to use first to pay for that? Because the cost is real. To have somebody come take care of you, even a family member, if maybe they're giving up work, maybe they're it's a child, right? Maybe somebody is putting their life on hold to take care of mom and dad, or if it's a spouse, right? So if any of that, which asset? And even if your family was able to help and to do it, then you have to ask yourself what sacrifices, who's going to suffer the consequences because you didn't have a plan in place. And this is not a call designed to make you feel bad. This is just to say, hey, with some thoughtfulness, a lot of what was created, 20 years ago has improved. But then my question is would, if there were other option versus just like, an ostrich approach, would you want to explore it? And that's what we can help you to look at. There have been innovations in the industry to help secure. So regardless of whether you use it, don't use it, you have a plan in place which gives you peace of mind. And I think you'll be, interested in some of what I have to share with you. So there's been a company, I've used this company, for quite a while, probably close to 15 years, Equitrust. And Equitrust has two products. They are leaders in this industry. One is a life insurance product. It's called the Wealth Max Bonus Life. I'm going to go over that in a second. That is life insurance. And then one on the right is Bridge. So maybe you wouldn't qualify for some type of life insurance. And both are pretty low bars to get into if you do this early. But one of the things, if you saw on the call, is it does not matter. You could literally be in a nursing home right now with dementia, having to pay that home. Your family's paying for that expense, and there's guaranteed issue. But we just have to understand what the agreement is. All right, so let's start with the left side, which is the WealthBacks bonus product. And Caitlin, if you could go ahead and put in to the chat a PDF that basically it's a consumer brochure and it's also sort of an example. And I'm going to use $100,000 because it keeps the math simple. But if you turn around and put in $100,000, so where would you get $100,000? A lot of people that nowadays are sitting on the sidelines, sitting in cash, sitting in CDs, sitting there, get a reasonable rate of return. But if that's the asset, should a long-term care event happen, you might end up using. So wouldn't you do better to get leverage? So one of the things that the insurance company, and I want you to hear me on this, if you gave $100,000 to the insurance company today and canceled it, there's surrender charges, all that, that's a 10-year period, but you are guaranteed to get your money back, right? So they're going to give you a 12% bonus. Right now, their fixed account is paying 5%. Now, because it is an insurance product, there is some fees and costs, so it's not going to be a net 5%. But with the 12% bonus, you would do really well to look at this. If you got some idle cash sitting off to the sidelines, you might want to think about it. And I put up this just to give you an idea, because I can't use the word guarantee unless you absolutely it's approved in New Jersey or whatever state, and this is approved in, I think, almost every state except New York. So let's say your $100,000 becomes 112, and I use 60 because I'm 60. And on the guaranteed side, that's the only column I'm looking at. If you turn around, your $100,000 is always there. Your death benefit is leveraged. So if you get hit by a bus, your beneficiaries will get more. But then I changed it. Now let's run out to age 85, where a lot of people might actually use the benefit. Well, now your guaranteed minimum is 155 and your death benefit is still 190. Now, if and I don't think we're going to get all zeros every year for the indexing options, but you can see that to the right of that are non-guaranteed assumptions. So depending on the index, if you did put money there and you put it off to the side as a sort of as a placeholder, you would see that, on the accumulation valve, $224,000, or the death benefit, which could be accelerated, would be 257. So take a look at those brochures. I think I'm going to see if I can open them up real quick. I just wanted you to the bonus. Let's see if it'll open. Yeah, there we go. So, guarantees. And I ran this up here. If you're guaranteed upon death, 180 in this example, they were 65. She was 65, non-tobacco user. And then, if she needed it for terminal, so let's say she was diagnosed terminally ill. Well, she would then be able to access the death benefit. instead of getting 180, she'd actually be able to pull out 170 lump sum. If she did go into nursing home for confinement, she would get 49.93 for 3 years, or 152 lump sum, or chronic care for 5 years, 29 or 3 grand a month. It's just a way to help pay the bills for caretakers should something happen. But here again, guaranteed return of premium, right? So it's just something to look at. And again, click those off, download them. This is just something that should be, on your arsenal or in your quiver for opportunities should something happen. So again, I just when I run across items, I try and bring them to the public. It is Long-Term Care Awareness Month. This is life insurance, and that's what they are experts in, is leverage, and that's what we're creating here. All right. So now let's look at option two, the bridge. The bridge is the guaranteed issue, and the bridge is an innovative solution. It's an annuity, not life insurance. So basically, it's age successfully and live independently, protect and grow their assets with benefits to pay for long-term care expenses. So flexibility. If a client chooses a coverage ratio to help them achieve the optimal balance between long-term care benefit and the growth of annuity accumulation value, providing underlying product value, even when the client doesn't need LTC services, the coverage ratio can range between 100% for the first year and a maximum determined by age and underwriting class. And I'll show you that in a second. So it's flexible. It's also got guarantees. The coverage is guaranteed not to lapse. There are no ongoing premiums. So these are both single premium, right? So if you have some money putting off to the side that you would like to get some leverage or put some protection in place, we could run a proposal for you and let you see what that looks like. Simplified underwriting. Everything that they do, both on the life and the annuity, it's all EAP. No paperwork, no medicals. It's an instant decline or accept or decline, right? So if you're healthy and you got a little skip in your step, it's something you want to think about. You would do well to see if you can put something in place. Then it's got the LTC benefits, right? So, 2 out of 6 ADLs, if you can't meet them, then it would exercise the payout, and I'll show you that in a second. And then a wellness program. So all these things are like sort of, bells and whistles, but I want to show you that, there are 3 columns here. There's preferred. So, like I said, it's guaranteed issue. I just, me being my background mechanical engineering, I think in terms of leverage, and so ratios. I go basically it's 3 to 1 on your money. If you're in good health, you're young, no issues. Put 100 grand in, they're going to give you 300, right? As a pool of money. In this case, it would be about 320. Now, let's say you're a little overweight, maybe you got some high blood pressure, maybe you had a heart attack, right? It's only now it's about 2 to 1 on your money. Your 100 grand will create a pool of money of 200 and we'll say $20,000 in that example. And then if you were young and you were already, and don't dismiss it, somebody could already have Alzheimer's at 60 years old. I had a client, I was doing a federal employee benefit workshop, and the gentleman came in and said his wife at 57 was full-blown Alzheimer's, and the federal government had given up John Hancock as a source. So, you're not going to get, if you put in 100, and where I want you to think about this, and this is where I was saying if you're in a nursing home, here's how my mind works. Let's just say I know that, Briarwood and Lakewood is about 100,000, or I'm sorry, $10,000 a month, $120,000 a year, right? So if you're spending that, the person's already there in care, whatever, and you had this plan in place, your $10,000 a month would now be $30,000 for a period of time. Or if maybe you were just 2 to 1, so your 10,000 was $20,000. So it's just more. If you're already receiving care, whether it be Alzheimer's, dementia, some type of chronic disorder, right? That it would not give you. It would basically, if you were paying 10,000, it would leverage to 14,005 at age 60. But where's I used 80 because I ran out of taking snippets. But at 80, 3 to 1, right? So your 100 becomes 300 as a pool of money. 2 to 1 if you got a little some not severe issues, but something where it would cause them to pause. and then 1.25. So your $10,000 becomes 12.5, right? It's just a way to be able to preserve more of your family's, assets, because the bills got to get paid. We just got to figure out how to be strategic in doing so. And what I like about it is if we don't use it, we haven't consumed it. And that's been the problem in the industry. Back in the day, traditional long-term care was use it or lose it. Well, here we're having a plan in place that allows us to access capital or an income stream to pay for the procedures or custodial care if we need to. So again, I think it's worth looking at, and I wanted to do that. And then lastly, the Pension Protection Act (PPA) is one of the most powerful sections of the IRS code, and went into effect in 2010. A lot of people on this call have annuities. They've looked at them, they bought them years ago. I just got off the phone call with the guy today, came to my Social Security seminar, and he's relatively young. But between he and his wife, they had $600,000 in annuities. And maybe this is a way to take what we currently maybe we're buying for income and put it in as a placeholder for long-term care. There's different ways to skin a cat. So if that's something of interest to you, we would encourage you to reach out to us. Let us know. We're happy to help. There's things to do, and we will continue to talk this month about all things long-term care. I'm trying to actually Dr. J, who's a leading scientist that created WellSpan, trying to get him on my call. I have to just arrange it, but that will be coming. But I digress. All right. The last thing I want to talk about today is, I just started sharing this at my Social Security workshops. Is something called that we offer at no cost to you is called Asset Map, right? If you'd like to, I share this story when I'm doing a class. Is how many of us have a junk drawer at home? And we all raise our hand, right? And some of us, our junk drawers have followed us through the years, right? Went from one house to another house, and some of us have more than one junk drawer. When we open up that junk drawer, one of the things we do, we go to Bed Bath and Beyond, and we get something called an organizer. We put that in there, and now it allows us. It's still a junk drawer, but it allows us now more readily able to find items that we're looking for. Well, what Asset Map does is if you take this QR code with your phone right now and you click it, you're going to be able to create an asset map. And once I get notified that you completed, I'll hop and send you an email. I'll send you the asset map. And you can see I picked Fred and Wilma Flintstone from my childhood. Then I just filled out some things. But you can put in your income. You can put in, where you're currently working, whatever you have in your account, maybe an old 401k behind. Maybe you have a brokerage account jointly held. Maybe you have a house, with a mortgage on it. And maybe you have some long-term care, or maybe you don't, and you're thinking about it. So how would all this look just for in one page to be able to sort of see and get your head around, hey, if something happened, where's everything at? So again, there's no cost to you. This is something that we will do and offer. We're proud to do this for you. So just take that QR code, snip it, and start the process. Take you about 5 minutes. And if I don't get it to you today, it'll be tomorrow. So lastly, we're at that time of year. For all of you, I want to thank you for taking times out, helping us to continue to serve our community. And one of the ways we give back is we give out apple pies. Now you got to go get them. They're up in Flemington. And Janet and the Madalinas are not only clients but friends of mine. I support local businesses. I think that that's a way to help our community. And so we buy the pies. You can take it home. I just had a client that I emailed, and he says, "Yeah, we loved it last year. We want to do it." So yeah, Flemington, you might be able to do a day trip. I think pickup is coming up, in like 2 weeks. So just let us know, and we'll make sure. I see some notes coming in. I just want to make sure I got everything. Yeah. So Caitlin just put into chat. She put in asset map as for a link. If that'll bring you right to my asset map. And she also put in the sign up sheet for the apple pies. So make sure you go ahead and do that. Take advantage of it. I cannot believe it's November and Thanksgiving is already upon us. So, but I want to thank all of you. Lastly, this is compliance. Basically, it says that the guarantees offered by an insurance product are not in any way related to our RIA, registered investment advisory firm, which is Brookstone. And then lastly, this is our disclosures, just saying, hey, everything I share with you, it's going through compliance, but it is subject to your personal investigation. All right. So with that, I want to thank all of you. Have a great day and reach out if you need me. Bye bye.